Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday. We're at the 24th of May, 2023. The time, 6:25 p.m. Central Time. All right, my friends. Last night in my full research, I started talking, I think that the rating agencies, Fitch, S&P, Moody's, there's probably some others, but I think I mentioned Fitch. I think I mentioned Moody's and S&P. Take that back. I said, I'm just waiting. The boom's going to come. They have no choice if they want to keep their credibility to at least put the U.S. on a watch notice, and then the downgrade follows very quickly afterwards. Guess what just happened? Literally this afternoon after the market closed. Fitch put the U.S. on a downgrade notice. Okay. The others will follow suit. Once one goes, it's a domino effect, because what that guy see that I'm missing, I don't want to be left out. Why am I holding back? They've done what they can. There's no choice. Why did it just happen? Did you hear McCarthy's talk this afternoon? All right. He was speaking, and again, they're nowhere near close. So nowhere near close, what do? I didn't hear him say that there's been any movement between the parties. Him too, okay? He's not Mr. Innocent. No taxes. They're not going to increase spending by any amount. They don't want to give up on that work program that the Democrats first brought in. It's a two-way street. Somewhere along the line, politicians do come together and they figure out the house of mirrors, how to tell us that they didn't give up anything, but we have a better deal and we're getting what they held to. That's the next step. They're playing with us. But in Bloomberg, I read an article just 15 minutes ago. So I was getting ready to do this, and I'm reading, and it says Social Security, June 2nd. I don't think there's a Social Security payment on June 2nd. So I opened the article to read it. Normally, from what I understand, it's Wednesdays. Do I know if everybody gets one on a Wednesday? I didn't know. But when I read the article, guess what? Who's the first payments that could be missed? The word is could be. I didn't say they're going to be missed, so please don't write me, Ira, you're ruining my life. That is not what I'm saying. Number one, if it were up to me, you'd get your check. I promise you. 88 years old and over, and those with disabilities are due to be paid on June 2nd. June 2nd, the day after the X date. Now, there is funding that comes for Social Security that's a little bit different than the general funding, but it is impacted in a big way. Could they fudge things? Could they get it done? Yes. Can you imagine the photo op of 88-year-olds in the street? I can't eat. I don't have any food. I can't get it. Disabled people. I can't get anything, and I can't be taken care of. Try to imagine all that taking place. This is coming. I just wanted you to know, but we'll come back here. That's the first thing. So between that, you're going to get to the point where over the holiday, is my guess, they have to come to some type of an agreement. I think the agreement should be an extension. This gives them the chance to battle it out for another week or two. I have said extension with you here for a month. We'll see if I'm right. I'm predicting that's where it's going. I don't see how these parties, after what I heard McCarthy say, can do it. Why Yellen, our Treasury Secretary, is the spokesperson for the Biden negotiating team is totally beyond me. She's the wrong person. It takes her credibility away. They just brought in Leo Brainerd. They brought in all kinds of people that have the credential, and we know they're brought in for a political reason. I always think that the Treasury Secretary, yes, they're appointed by the president. Yes, they're political, but not as much as she's become. I think there's a problem there, but that's how they're doing it. Okay. So after the bell, also NVIDIA came out with its earnings. My gosh, a blowout to the upside. Now, there's other companies that aren't doing real well, but they blew out. That is why your NASDAQ is soared to the upside. It's carrying part of the S&P with it. Anything with tech is getting carried along to a degree. Dow is certainly not that, and the Russell's really not that. So that explains that part. In the foreign currency market, they're just looking at the Fitch situation and yawning. Did you see the numbers that we got today that came out on the EIA for the drawdown in oil? You know, I thought that 6 million barrels was a monster number from API, 12 million here. So again, I want to congratulate our president and his team for doing a wonderful job of replenishing the strategic reserves just as they said they would when the market fell between 71 or 72 down to the 60s. Good job. You filled it to the brim. Congratulations. I told you they'd miss out. 74 is not under 71, so they'll get the bids in and then they'll say, they're not acceptable. I laugh at it. The market still isn't buying the idea that we're out of the woods with the things I'm saying. You're down another 10 in the bonds, you're down another 6 in the 5-year. Remember, as these fall, the interest rates are actually going higher. It's a scary time we're in. This is bluff poker of the biggest magnitude with your money. Remember that when you're going to vote. I don't care if it's Democrat, Republican. If you're hurt by it, don't forget it. They've got to negotiate. Both parties cannot win. I agree for one, you can't keep spending. The spending has to end. You can't spend more than you did last year. I don't see why the Biden administration is fighting that. As for giving in on other parts, I'll let the politicians. But this spending has to end, and at some point it has to fall, period. In the S&P, as you can see, you're down 1.5 points for the week. This is a weekly area chart of closing prices, so it looks at the current price, assumes that's the close. That's where you're at. The support in the market's 40.93, hasn't changed. When we take a look at the S&P on a daily bar chart, we had a pretty big break. You can see lower highs, lower lows. You're in a downtrend. You can see the battleground has been the 18-day average of closes. Agreed? How often do you hear me say that if you take my charting course, you learn that when a market's way down, it likes to fight at that 18-day average. Way up in returns, it likes to come there. You can get that course for free with my Memorial Day offer. Stay tuned after this. I'll show you how this works. Just a few days and then it's kaput. When we take a look at Bollinger Bands, where did this market stop on its rally? You don't see the bands? Now, when they're up there, I know you're wildly bullish. When they're down here, you're wildly bearish. That's what people typically are. I teach you how to beat that and how to work with this in the Bollinger Band course. We then look at what's happening in momentum. Momentum is turned down. So at this point in time, the trend is down. The bias is, at the moment, down because you're at 41.44, which is under 41.49. If you don't get resolution, you opened up the door to get back to the Bollinger Band of 40.83 down to the 100-day average of 40.8375. There's nothing on this chart, nothing that can turn this chart bullish. Doesn't mean you can't rally. Nothing can turn it back into higher highs, higher lows at this point in time. In the NASDAQ, you have a higher high and then a big break today and a bit of a recovery. Now, this is important. If you take a look with me at the close of business Wednesday, you lost the embedded reading. You had one all through here. You lost it and you didn't get it back right away. That's often a sign that even though the market's given you a rally here off of NVIDIA, it probably overall is still in the bear camp. If you re-embed with both of these on the close of business over 80, you're back in the bull trend. That's what it has to do by the close. In the Dow, you're down to the Bollinger Bands. You're not embedded. Again, take my course. You're going to get it for free. It's a $120 value. You're going to get it for free. Let me explain it right at the end of this. In the Russell, higher lows, higher highs, and all of a sudden with the break you've now gotten, you took out that low. So that brief rally, and I said, isn't it strange how the weakest, I said this yesterday, has become the strongest? Well, suddenly it's become nothing. That lasted 24 hours. In the T-bond market, as long as you have this embedded reading, what did I say to you? I said it in my morning subscriber video, that the problem in the market is the rallies are still to be sold. The problem is there's no way to protect yourself if a deal is struck. Now, I don't know how the market would react to an extension. An extension isn't a deal. It buys more time. I don't think it would have the same impact, but I do think you'd get short covering in all the markets off of it, but not the lasting impact of a deal, because an extension means you got to go fight this battle again soon. When we look at the 5-year notes, you can see how the market coming down. Now, you know, the FOMC minutes came out today. I read them a couple of times. I walked away not thinking what the press is saying. I think that you are right at the cusp where the jobs data and the CPI that come out in another week are the key. Once we see the jobs report, I'm concerned because the service sector was so strong in yesterday's data. And if it stays strong and it keeps the service sector strong, from what I read there, I'm not in the camp that Fed Chair Powell is going to go into a pause phase. He has one mandate, because he has the full employment. The one he hasn't filled in the mandate is getting inflation down. His job isn't to look at the stock market. His job is to keep the economy fine. And if we get into a debt ceiling that cracks the market, then he can go into the pause. Barring that, barring a recession that crashes the market in some way, which I don't see either, I have a hard time unless these reports come in weak. If they come in weak, I swear to you, I'm this way. And weak to me is even wobbling. Give them some pause, give them a little bit of cover. But if they come in strong, gains are strong, no. And don't tell me the headline inflation on CPI. Show me that the core inflation gives us a meaningful drop, 0.2, 0.3, something like that. Don't tell me it's unchanged, but it will fall, and that's a reason to pause. I don't accept it. In the dollar index, continuing to run. Everybody wants to own the dollar, not because we're such a wonderful place, by the way, but if we crack, if you lose the credit ratings, if you don't get the deal done, we're the best of a real bad of events. And that's what's going on right there. In the euro, it's not that they don't want to raise rates and aren't going to. Their problem is if we crack, they get pneumonia. And that's what's going on. They have the bearish reading there. British pound, the same. You already heard the Bank of England today. When they got inflation numbers out today, they're going, we think we have to raise rates. But you can't get out of the way of the U.S., what's going on right now, and it's just hurting on everything. Bitcoin, there's no protection on this. Where are the people that believe this is your storage of value? That's all I'm saying. I'm not seeing it. That is certainly not showing up there. And the differential between Brent and WTI, well, you got a big spike and you came back to the 18-day average and you held it. You don't have, in my opinion, a long way to go before you hit the resistance now. In the Brent, I'm looking at the 78.23, the Bollinger Band to be it. You're already in overbought territory, around $75 in the July WTI, and you're overbought already. Gasoline, no, you don't fight it while people are going to be driving. Let the market pull back. But what was resistance might be support in that 200 and 100-day average of closes. And as you know, in nat gas, I'm thinking that these low areas are very important here, the lows we just made in these markets, and I'm not convinced you're going down in a meaningful way any longer. Too many people are going to want our natural gas. Europe got away, and it's beautiful. It's great that it happened. They didn't get that real cold winter, but they got to fill reserves. They don't have Russia anymore. They're not going to have Russia for a very long time. This war is nowhere near over, and the animosity between Russia and these other countries is immense now. And, you know, wait, we got to get, we have what Finland got into NATO, so now we got to get Sweden in, and it's going to get even worse. And you're not going to see the Russian market come back to Europe for a very long time, 5 years, 10 years, who the heck knows? It's going to be a while. Things don't just change. Now, as I told you, it is Memorial Day. Take any of my 1-year research programs, my full futures research, my written, and the morning subscriber video, and or just the subscriber video in the morning, or my ETF, Spider stock market video in the morning. Some of these are, what, $160 roughly, and you can take any of my courses. They're yours for free when you want to start it, and yes, you can even give it away as a gift. You tell us what you want to do, we work with it. My full charting course by itself is $400. Does that give you an idea? So this is only going to last to the 31st. It's over on the 31st. Take advantage of it now. How do you do it? If you're watching this, move your cursor up to the top here. Give it a click. You'll be taken right to the web page with it. I have sent out an email if you're on our mailing list to everybody already. It's there. Just give it a click and away you go. It's a great value if you're looking for one of these courses for yourself, a friend, and of course, the research for you. You can also buy that research as a gift for somebody else. We'll honor that. I'm Ira Epstein. You have yourself a great day. If you have questions, you can always call my staff at 866-973-2077. I'll talk to you tomorrow.